Hey there, and welcome to the daily market rundown where we break down the biggest financial news impacting the stock market and the global economy. So, today we have got a packed session with IndusInd Bank facing a major sell off due to discrepancies in its derivative portfolio, China launching a powerful AI model to rival the OpenAI, Syngene making a big move in biologics with its first US facility, and NTPC investing heavily in the nuclear and renewable energy. So let's dive right in. First up, IndusInd Bank shares came under major selling pressure after the lender disclosed potential discrepancies in its derivatives portfolio, impacting the net worth of the company by rupees 1,577 crores. The stock stumbled by 23%, hitting a 52-week low of rupees 693.3, marking a nearly 53% decline since September 2024. The issue was aroused following an internal review conducted by the RBI's Guideline 2023, revealing discrepancies in the other asset and other liabilities accounts related to the derivatives transactions, potentially affecting a 2.53% of the net worth of the company as of December 2024. The financial hit of rupees 1,577 crores will reflect in the Q4 performance of the company for financial year 24. CEO Sumant Katpalia acknowledged these issues and which were identified in the September and October 2023, and the RBI has been informed with an external audit report expected by March end. However, investor confidence took another hit as Katpalia's tenure was extended by only 1 year instead of the 3-year term requested by the CEO, raising governance concerns and speculation over a leadership change, with analysts predicting that IndusInd Bank might soon appoint a new CEO, possibly from the public sector. Market participants are now keenly watching about the upcoming audit report that the company will issue and potential management changes in the future as regulatory scrutiny and investor caution continue to drive the stock volatility. Meanwhile, China is making significant advancements in the artificial intelligence with the launch of Manus, a powerful AI model developed by the Chinese startup Monica, directly engaging OpenAI, Google, and Anthropic. Unlike traditional chatbots, Manus functions as an autonomous AI agent capable of executing tasks independently, such as conducting stock analysis, planning trips, and even building websites. Key features for this autonomous execution, live web interactions, cloud-based operations, and adaptive learning is that it is making the next-gen AI tool. It has outperformed OpenAI's deep search in the GAIA benchmark, showcasing its advanced capabilities to conduct real-time web research, automate report creation, and manage multiple screens, positioning it as a serious competitor to global AI leaders. As AI-driven browsers and autonomous agents gain traction, the competition between China's AI and Western tech giants is expected to intensify, ushering a new era for the AI-powered automations. Next up, in the pharmaceutical sector, Syngene International has made a strategic move by acquiring its first biologics facility in the United States for $36.5 million from Emergent Manufacturing Operations, a subsidiary of the Emergent Biosolutions. This acquisition significantly boosts Syngene's biologics manufacturing capacity, expanding its single-use bioreactor capacity from 20,000 liters to 50,000 liters, enhancing its large molecular discovery, development, and production capabilities. The facility, which has faced regulatory scrutiny while manufacturing Johnson & Johnson's COVID-19 vaccine, has now cleared all the US FDA compliance requirements. Emergent Biosolutions will retain rights to secure manufacturing services at the facility, ensuring operational continuity. However, the acquisition might cause short-term margin dilution due to associated costs, as noted by Syngene's CFO Deepak Jain. Following the announcement, Syngene stock dropped 1.96% and has underperformed its sector by 16.96% over the past year. though it has delivered a solid 20.02% return over the last 3 years. On the energy front, we have NTPC Group along with its subsidiary NTPC Green Energy Limited, which has announced a massive rupees 96,000 crore investment in Chhattisgarh, marking a significant push towards nuclear, hydro and renewable energy expansion. At the Chhattisgarh Energy Investors Summit 2025, NTPC has signed an MOU with the state government of Chhattisgarh to develop a 4,200 megawatt nuclear power capacity with an rupees 80,000 crore investment, marking as NTPC's largest nuclear energy project. Additionally, a rupees 5,876 crore investment has been allocated towards a 1200 megawatt pumped hydro storage project in collaboration with the Chhattisgarh State Power Generation Company, ensuring grid stability and efficient renewable energy utilization. Further, a rupees 10,000 crore investment is planned for a 2 gigawatt solar, wind and hybrid renewable energy project under the joint venture with SCPGCL, contributing to the state's renewable generation obligation and renewable purchase obligation. This investment strengthens Chhattisgarh's position in India's clean energy transition, reduces reliance on the fossil fuels and aligns with India's net zero commitments. As India is accelerating its sustainable energy initiatives, NTPC's ambitious projects are expected to boost employment, infrastructure and the overall energy security of the region. That wraps up today's major headlines, from IndusInd Bank's stock plunge to China's AI's breakthrough, Syngene's strategic expansion and NTPC's massive green energy push. There's a lot unfolding in the stock market, so stay tuned for more updates and don't forget to like, subscribe and share.